Worldwide markets this week, value on the JSE. What are some of the cheapest shares? We'll go digging. The Purple Group pullback and 2025 ETFs returns so far this year. They've been wow. I'm Simon Brown. This is Worldwide Markets episode 651 for 8 October, recorded Tuesday afternoon. Worldwide Markets, powered by Standard Bank Global Markets, Retail, and SHYFT, the global money app that puts travel, shopping, payments, and investments in the palm of your hand. Enjoy the cheapest forex rates anytime, anywhere. SHYFT, powered by Standard Bank. Thanks to Standard Bank and thanks to SHYFT. I spoke a whole bunch around Purple last week. Folks were like, it's pulling back. Should we be panicking? The answer is panic is never a good response. But where does it potentially pull back to? That run up to last week when it got to, what did it get to? 274. And it did it on volume, or the bigger volume the day before. Make no mistake. It's coming back. I think 210.2 is probably where it's going to go. And then ultimately the question everyone was like, so what's the target? Well, 350 in the immediate, because that's where it's been to before. Results for the year end is August. So we typically from them will get a trading update late October, probably early November. And that will be a really positive update. And if it hasn't started running hard again, it will then, and then of course we run into results, and then it depends really what their forward looking is. And I, as I say, am expecting it to be positive. As I said last week, they've got the clients. It's a bull market. They're making more under assets under management. Crypto's at high, gold's at high, local, offshore, everything's at highs. So stockbrokers make more money when things are at high because we're bullish and we don't want to miss out. So I think we'll get a lot more coming through. And talking of that, I did an ETF post last week. You'll find it justonelap.com/ETFs. And I was looking at returns, excluding dividends, so far this year. Top of the pile, Satrix Resi, not a surprise. That was 118%. That was as of last week. The Satrix Sharia at 69. That's not a massive surprise because they are full of gold stocks because of the Sharia. And then it's platinum, rhodium, the 10X top 20, the RAFI 40. The first active is the Easy ETF's Global Equity Actively Managed ETF, up 35.9. Then it's gold, then it's SWIX, and there are some losers on the downside, but not a lot. I mean, it's a dozen or so. Signia Health Innovation ETF is the biggest loser, but it's only down 9.2%. India's down 8.7%. Global bonds having a tough time of it. Satrix Healthcare down 2.4%. They are looking to do some changes there. So certainly what we've got is a market that is having a booming year. And you're saying it's gold. Sure, it's gold. I mean, it's going higher. Do we really care why? Now, I mean, we could argue that the US is all AI. Going higher. We like it. We like markets that are going higher. It makes us, it makes us feel richer, but actually, if we're in the right place, it actually just makes us richer as well. And that's perhaps really what matters. We've got a Standard Bank Power Hour next week, 16 October, 5:30, with Warren Buffett stepping down from Berkshire Hathaway. We're going to be talking around investing like Warren Buffett. And there's a lot to go into it in terms of a lot of his, he talks around having a moat. He's moved from value to growth at reasonable price. He talks around when the tide goes out, you can see who's swimming naked. And if we talk, I was talking around NVIDIA, sort of self-dealing last week. We've had more of it with OpenAI and AMD and all that sort of stuff happening. It will be next Thursday, 16th, either Rosebank in Johannesburg at the head office or in webcast, 5:30, justonelap.com/events for more information and booking. So I said last week that let's go and have a look at shares on our JSE that are cheap. And I thought, cool, let's go and do that. I'm going to be using my Koifin, and it lets me do a search. And my search is quite simple. I want PEs between 0 and 10. It must be at least 0 because that tells me it is making profit. I don't want loss makers. And to be clear, whatever criteria I put here, we are going to have some fall through the cracks. I mean, that is unavoidable. This is just a nice start point. So we've got, as I said, I'm looking for price earnings between 0 and 10. I think 10 is fairly a good price earnings. I'm also looking for a dividend yield of greater than 0.01%. In other words, I don't need a lot of dividend. I just want some dividend. Why? Well, because dividends are nice, but also because dividends tell me that the company's got some good cash flow, free cash flow, and they can then pay that out to shareholders. And then I want price to book to be less than 1. Book is essentially the net asset value. In other words, all of your assets minus all of your liabilities, what's left, and what is the value of the business. So if your book value is 10 Rand a share at breakup, and you're trading at 8 Rand, well, then you're at a discount to NAV or book as you do it. So that are my criteria. Next, have a look at what we got. I'm expecting to get a bunch of property stocks into it. We'll see what comes through. Let's run through it. The MTN, yeah, so not MTN, it's Kelly Footy, which is their BEE scheme, which is in some ways almost bankrupted. Ascension property, small little property stock. Sappy, no paper. We saw the Mondi update on Monday, and the market hated that. Sold Mondi down some 15%. Sappy in sympathy was down some 6%. And I got to say, the paper space is really, really tough right now. Very, very tough. The demand, because we're all going onto our computers, the tariffs that are impacting not just trade, but also their ability to move goods around the world. And Mondi also lost had to sell their Russian asset. Putco is interesting. I have to say, well, Put Prop is the official name for it. It is buses in the Western Cape, and it hasn't been listed particularly long, and I'm not sure what its valuations are like, but it is paying a dividend yield of around 3.5%. Its price to book is about 0.3, which is, I mean, just crazy. And the historic price earnings is 5.7. The thing with it is, I mean, we don't really have a sort of a state transport infrastructure. Our price are in trains, although in the Western Cape there is more trains, and there is the My City buses in Cape Town, and they work great. To be clear, I love the My City. So people need to move, and there are the taxis, absolutely there are, but there are buses as well. And I do think this is probably one worth having a look at. It is a small cap, a very, very small cap. It probably has, and we'll go have a peek now, terrible spreads. In other words, yep, I mean, you got buyers at 380 and sellers at 558, and you have very little volume going through. And this is going to be, these sort of investments, if you jump into them, you have to kind of say to yourself, man, treat this like private equity. It is going to be tough to get out of. It's going to be tough to get into. You don't want to pay the 558. You want to try and put a buy in at 4 Rand and see if someone will sell to you, but then they only sell you 10 shares. And now what are you going to do? There are all of those challenges. I tend to stay away from them, although certainly there is money to be made. As I say, I tend to stay away. They just spook me. I've been caught before, put it that way. Brimstone, I'm not excited by it. E-Media. So Remgro has just unbundled a bunch of their e-media. They've got a PE of 4.8, a dividend yield of just under 12, a price to book of 0.3. This is a cheap stock. Make no mistakes about it. It again is another relatively new one onto our market. Not done very much in the last 5 years. We're not going to get any analysts or anything because, again, there is a lack of liquidity. Mark Hassenfuss was writing about it in Financial Mail, I think it was just last week. But your spread here is not too wide, although there's not a lot of liquidity going through that particular share. In fact, very little liquidity going through. Today, value is 10,600 Rand, which for some of you is like, okay, for some of you it's your portfolio. For others of you, it's your brokerage fee, not what you're looking to invest. But it is one I quite like. I do think it's worth having a look at. It's free to air. It's ETV. I get the challenges with media and the like, and your competition, of course, is streaming and the like. But I like the media space. Although I have to say we have to be careful about which parts of the media space, perhaps. Calgro M3, I hold it. Results on Monday, so I'm expecting any day now a trading update. And the reason I say that is because this is going to be for the 6 months ending August. Is that? Yeah, 6 months ending August. Last year for that period, or for the last financial year, during the elections, they really pulled back. In the previous national elections, which would have been 2019, they had a lot of violence at their sites, invasions and the like. It cost them a fair truckload of money, so they pulled back quite markedly during the election campaign this year and the ultimate counting. And nothing happened, but they weren't producing, they weren't selling, so they didn't do as much as they could have. It does have a dividend yield, not much of a dividend yield, but it does have a dividend yield. And it is illiquid, but it's also pulled back quite markedly and not on the list. I don't think it's going to be on the list, but Baldwin as well. We need housing in this country. Now, Calgro is mostly aiming towards the lower end. Baldwin's mostly aiming towards the middle end. I think that the cheapest Baldwin is probably maybe 1.2 million. Most of the Calgros are going to be sub 1 million. And then, of course, Baldwin goes to their fancy ones like Belito and their other estates, which are multiples of millions. But I got to say, I like it. And my pick was Calgro. Baldwin has been having a much better time with it recently. Supergroup, chatted about that last week. New World Holdings, look, they always pop up. They are a continual disappointer. Crooks Brothers farming down in the South Coast, KZN. Nope. HCI. Interestingly, on my on Stockwatch on Monday evening, HCI was the stock pick, in part because they've solved the problem with the union needing some cash flow. They're going to swap some shares for some properties. Those properties will generate cash flow for the unions who are shareholders. So that resolves that. The union has currently been selling, and they're at discounts to their assets. And we're not even talking the oil and gas assets here. We kind of said thanks, but no thanks to that. Thungela Resources, it is cheap. It is coal. You make your call on that one. Octodec Property, a lot of inner city, NX Group, AdCorp, Yeba Yetu. Actually, I was chatting with Craig Gradage from Mahura Investments, Gradage Mahura Investments recently on my MoneyWeb show, and he really, really likes this one. It is the Vodacom BEE deal. It is a perpetual deal. The lower interest rates mean the debt costs less. They can cover the cost of the debt from the dividends from Vodacom. It's not going bankrupt like the MTN one has done. The MTN one's not bankrupt. Just as a shareholder, you got absolutely thrown under the bus. And it's at 50% discount to net asset value, which is just the shares it holds, less the debt. And then Craig Gradage will always say to you, yeah, take a holding discount off as well. Of course, it is BEE, so it's not everyone. Some of these I don't know. Caxton I mentioned last week. They've got about as much cash and hold stakes and impact as they do market cap. Of course, that cash is probably going to go and buy market cap. So it wasn't last week. Was it 2 weeks, 3 weeks ago when I was looking at three stocks that had market caps, frankly, below the cash and holdings. It was Pick and Pay, it was Supergroup, and it was Caxton. SAB Zanele, which is their BEE deal, that's probably now trading at about a fair value of 0.7. That one went crazy on listing. Safari, Imara, both of them property. Invicta is interesting. I'm surprised to see Invicta on this list, is the honest answer. I appreciate Invicta has some challenges, but they've done really well. And you know what I like about Invicta is what they've done is they had a preference share and they've got rid of the preference share. So that is, I don't know, tens of millions that just drops to the bottom line. No questions asked. It is not steep, expensive, nor is it onerous. Of course, they are capital equipment. They provide it, they maintain it, they provide parts for it, and in South Africa, that is really, really tough. But they are cheap, and a dividend yield of just over 3%. They've got a PE of just under 5 and a price to book of 0.7. I don't know that we're going to get any analysts' expectations. Let's see if anything pops up there. We just have one. Nope. Yeah, we have one. He's got a target slightly higher than where it currently is. So that was Invicta. What else have we got on this list? That is the wrong list. Suddenly Nike pops up. I'm like, I'm definitely in the wrong place. Invicta, Sea Harvest. You know what? I love the idea of protein as an investment. And that protein could be chicken, it could be fish, but I've learned the hard way. Well, actually, I haven't learned the hard way. I've managed to never invest into them, but I've watched the hard way that, man, they make for horrible investments. Fine. We're going to see, as I said, a bunch here. So Redefine's 30% discount to NAV. This is all for close Monday, 6 October, and offering a dividend yield of 8.3. That is a good deal for a quality property stock. Collins Impact. So, I mean, the big story of Impact is, remember, Caxton owns 30-something% and wants to make an offer, but they're worried about a competition commission that hasn't yet, in their mind, properly concluded. So nothing's happened in that regard. They are going to be struggling a little bit. For example, they've been doing a lot with packaging for citrus fruit exports, and some of those exports were going to the US. Now, when I chatted with Bruce Strong, CEO, at the last set of results, he was like, yeah, look, it's not insignificant, but it's not the end of the world. Master Drilling, which interesting, was my other guest's stock pick on Stockwatch on Monday evening. They make mines. They go and dig the holes for you, underground, the shafts, the ventilation tunnels. They've got really good IP. They operate all around the world. North America has been a bit of a problem for them, but South America and copper, Africa, gold, etc. And one of the beauties is, I mean, they're obviously at the moment not mostly, but yeah, I think their two biggest commodities is gold and copper. Makes perfect sense, right? Gold is at records, and copper is the talk of the minerals at this point in time. But when that changes, at small cost and effort, they can move things somewhere else. Problem is, the markets just never like them, and that's the problem with some of these stocks, is what's going to get the market loving them. If you're getting a good dividend yield, well, that's fine, but you need a good dividend yield. Attack coming in, property, of course, that is Mall of Africa. Exara, more coal. Lewis, heck yeah, Lewis, come on. Dividend yield of 10.1. I mean, Lewis is a bank that masquerades as a furniture shop. They sell you furniture, and then they sell you a loan for that furniture. And they've done really, really well. You can say what you like. They've done incredibly well. It is, as I say, a chunky dividend yield, and it's trading at discount to net asset value. Price earnings of 5. Dividend yield here is showing up as 13, which is weird. And I don't want that one. Let's see if there's undoubtedly some. Yeah, okay, there's only one analyst, and they say 41 Rand. It's currently 75. This is one that Chantal Marks very much likes. She's definitely a fan of it, and for good reason, because it is printing cash. And the worry is always that they will lose their way and start issuing bad loans, and that's definitely a risk, but they've managed to avoid that so far. Growth Point Properties. Now, I am not a massive fan of Growth Point, simply because I think they're just too big. You know, how do they ever do anything? How do they move the dial? But you're buying them at 20% now. If you're buying them on a dividend yield of dividend yield of around 8%, it's not bad. Harriet Oceana is again back to fish. Zeda Vehicles, liked it. Market, since its listing, it's just done absolutely nothing. It's been, I don't want to say a dud listing in a sense, but I mean, I've been watching the stock since it listed, and it's just stayed at around, it's taken some dips below 10. It stayed around 12. I had bought some, sold it. I made a little bit of profit, like maybe enough for a burger and chips, but no Coke with that burger and chips. Let's be clear about that. Hyprop, they are selling half of their Hyde Park. They've got money they raised for the Mass PLC, which never happened. They will sell the other half of Hyde Park because there's call and put options. They're going to be focusing on Eastern Europe, Western Cape. Good yield and decent PE. RCL, yeah, no. Nixus, no. Diplo's Property. Argent, Anthony Clark always talks about it. They're a good little business. They're in manufacturing and surprisingly doing well, but they're also, what's important perhaps, is they're not just local, they've also got UK operations. SHYFT is Chris Seabook. Many will tell you, is sort of the Warren Buffett of South Africa, and SHYFT is the Berkshire Hathaway. That discount of only 10% is not massive, and that dividend yield of around 9% is not massive either. Investec, look at that. Investec pops up. There are going to be a couple of banks there. Novus, there's ABSA, and I think there's Nedbank as well. I got to say, I don't disagree with that. Those banks are all cheap. Their price to books are 1 or a little under 1. Their PEs are mid to high single digit. Their dividend yields are high single to low double digit. They are cheap. This has been cheap forever and a day. Nedbank just doesn't. I struggle to get inspired with Nedbank, and then of course Investec, which is quite specialized, but. I think the banks are looking decent. They've run. We've got Capitec being Capitec. Although I just wrote an article, it'll be in this week's Financial Mail out on Thursday, talking around Capitec. And at current levels, I think it's fairly valued. I don't think it's expensive. So yeah, I think there's definitely value in our banking sector. Not as much as there was a year ago. Make no mistake about that. Old Mutual is interesting. Nice dividend yield, around 9%, price to book of 1. The problem, and they're going to be launching a bank, which everyone's doing a bank, except it seems you and I, but aside from us, everyone is doing a bank. Here's the thing with Old Mutual, is they're a long-term insurer, so we pay our premiums, they take it, they invest it, and then at some point we claim, but those profits on the investments is theirs, right? That's how it works. And markets at records, they're doing really well with their investments. In the South African space, how are you growing? I mean, where is your growth? You've got to steal from somebody else because there is no GDP growth happening at all. Coal Group, I like them. I always get my senses. I need to know more about what's happening in the farming space, but they're interesting. Motus, I like the car vehicle space. We got vehicle sales last week. It was at a decade high. September 2025, previous highest number was September 2015. Motus is nice because they've got the Korean cars and they've also got a lot of aftermarket. I hold CMH. You could also get We Buy Cars. They're all quite good. Storage is lacquer. I hold it. Although at a price to book of 1, I'm less excited. I want my property stocks at a discount, which I would then say the same with Spear. And then African Media Entertainment. So 10% dividend yield. I quite like the business model. It is linked with MoneyWeb, so disclaimer in that regard. Again, we're going to get really, really bad liquidity all over the place in this one. This is the stock that taught me about liquidity crises. That is, okay, that's a better looking chart. Way back, and I think we're talking late 90s, I bought some of this. The dividend yield was around 12%. One day I wanted to sell it, and there was no buyers, not one. So I did what any newbie would do, and I absolutely panicked and said to my broker, please, sir, at any price. And he got me out at a price. So I think it was 14 Rand back then, maybe. And he did get me out. But, I mean, it was my lesson learned. And maybe the more important lesson, was that? It must have been, okay, so it must have been early 2000s. Yeah, okay, somewhere around there. Maybe it was 4 Rand or something. The liquidity here is not too bad, but you can see just the lack of trades going through. A spread that is, almost 10% between buyers and sellers. I mean, volumes on some days, 115 shares, 13 shares. And what's happening? 26. What's happening there? You don't want to, the seller's at 44.98. So what you do is you put a buy in at 42. Now you're top of the buy list. Someone who wants to sell hits you. So you say 42 Rand, you want to buy 1,000 of them, 42,000 Rands worth. Someone sells you 20. Now what? So either you take the 20, which is going to cost you 800 bucks, and your brokerage is going to be, 100, 200 Rand, whatever the case may be. If you're at easy equities, different story. But now do you just swallow it and make a massive fee payment? Or do you try and quickly hit some of the sellers? Because they're going to bulk it up for the day. So if someone hits me at 2 o'clock as I'm recording, well, I can go and, hit some of the sellers later. And that's the problem with these high liquidities. So there are other ways to skin this list. I have another screen here as well, which is broadly the same. What are we looking at here is PEs less than 8, and I'm looking for small caps more than anything. And it's a lot of the same ones that are coming through. Soho also manages to come through. Otherwise, Transpaco's there. So they do packaging. In a low environment, a low GDP environment like this, I always worry about packaging. Invictus there again. Abvest, Nampac picks up. PE Capital Partners, Quantum. There's Baldwin. Baldwin finally makes it. Didn't make it on the other list because no dividend. And then York Timber coming through. Short answer is there is a lot. There's a list. As always, disclaimers, not financial advice. Go do your own digging. But the short answer is there's a lot of value on our market. But as always, watch out for liquidity traps. Worldwide markets, powered by Standard Bank Global Markets, Retail, and SHYFT, the global money app that puts travel, shopping, payments, and investments in the palm of your hand. Enjoy the cheapest Forex rates anytime, anywhere. SHYFT, powered by Standard Bank. Thanks to Standard Bank, thanks to SHYFT with a Y, and we'll be back again next week. There are 10 more weeks this year, so 9 more podcasts coming through. My name is Simon. As always, look after yourself, and if you can, look after somebody else as well. Cheers all.